Hello viewers, welcome to Soko Financial Analysis for Uganda 2018. And here on the panel I have
William Nkatura.
Ismail Magara. Give an overview of what the financial markets are in Uganda.
Umeme's financials came out, Uganda Clays came out, I think, on Friday, yesterday. Stanbic Bank, DFCU, and almost all of them did perform quite well.
In terms of development, can you give a brief account of what that does have to do with the liquidity?
Liquidity.
Yep.
So again, now it comes down to the market. The market then has to have a perception of if your growth is worth paying a premium.
Okay.
And what we've noticed in our observation as stockbrokers is that emerging market funds that used to be very active in Africa haven't been fighting for the shares. Like anyway, what we call the big elephants fighting. When the big elephants like NSSF or fund managers from abroad start fighting for the share, they start to pay a premium for it.
Yes. What do you have to do? What do you have to do, we as Ugandans, to have more people on stock markets?
Well, in relation to what I just said before,
yes.
You've got to also follow what the big elephants are doing, because if they're paying a premium for one particular stock, that's where the liquidity will be. So if you come and buy a stock where the big elephants are not playing, you will buy a share and get stuck with it.
What effect do those big elephants have on these Ugandans, the upcoming Ugandans?
So if you mismatch if you don't invest where the big elephants are investing, you must have already your own goal and plan if you are a retail individual. And so if you're looking for, let's say, the dividend, but you're not getting the capital gain, and that was your clear decision, that's all well and good. But if you're looking for liquidity, that tomorrow when I need to exit, you want to have shares where the big elephants are willing to cash you out tomorrow.
Can you give your final say on our discussion today?
My 2 cents about where the market is right now is that as much as the stock market may not be as liquid or probably not paying as high dividend returns as we would like, there is also the bond market where the central bank actually offers T-bills. And that one, if someone were to ride the cycle, they would see that the yields on some of these bonds are fairly high.
I would like to know, if at all I had some little finance around 200,000, how best can I be on board to benefit from financial markets?
Well, again, surprising that you'd ask with 200,000, because the minimum requirement to actually buy a bond in Uganda is 100,000 shillings. So you even qualify to actually buy T-bills and bonds. The ability for you to also have read the financials that were in the newspaper last month for all the companies we spoke about earlier should have given you the confidence of if these companies are worth paying a premium, or if not the current share price today.
Where exactly can I put my 200,000 to make sure that I benefit most out of it?
I would have a variety of options. If I feel that the Ugandan currency is going to fall into the next 1 year.
Is it going to fall?
Again, it depends on the pressures that the shilling is facing. If we need to actually import the materials or let's say the machinery that is required to build this country, then yes.
Are we importing the machinery?
Yeah, well, when the oil and gas sector actually kicks in officially, which we all know is going to most likely start in June, there is some of this machinery that is not here. The steel, the finery, the machinery that would be required to build these pipelines and these refineries and also the drilling. So that comes at a cost. But you have got to offset it with what you export.
William, thank you so much. It's been nice having you.
Gladly. Let's go hunting.